property, you go and you pay 5% down, you leverage that money in the stock market, and then after that, only do this if you guys can afford this, if you guys can afford to have some extra money put aside and able to make sure that you can always afford to pay the government back. What's up everyone, this is John Shaw at Next Level Success, and today we're going to be talking about real estate and stocks. So let's get right into it. So stocks and real estate. Right now I'm going to be talking about what the things I'm doing when it comes to both of these markets, and you guys can make your own perspective on it and go based off of your own research. Don't necessarily listen to me. I am young, I still have a lot to learn, but I do research a lot of this, and I like to think I am definitely going on a good track, always doing this research and really evaluating both markets. So what I'm doing right now is I'm looking to invest in real estate. Now, if you're looking to invest in real estate, right now is a great time to invest in real estate because the economy is down. So what does that mean? Maybe not in the next coming months, but in the future, or in the near coming future, the economy will eventually start to recover. Now, when the economy starts to recover in real estate, what does that do? Well, when the economy starts to recover, that means right now we're at almost what I would say a rock bottom in both stocks, and maybe not necessarily real estate. Real estate didn't take as big of a hit, but because tenants, if for any vacancy where people aren't occupying units, there is vacancy, and then real estate owners are having a hard time finding a replacement or someone to move in. So that's why real estate is a little bit having a hard time, and all the people that are unemployed are also having a hard time paying their bills. So real estate is taking a hit right now, but that makes it, for a first-time investor and anyone that has money sitting aside, it makes it a perfect time to go and invest into real estate, because the equity of a house is down. So right now the equity is down, and then when this all recovers, the equity is going to go up. So what is equity? Equity is the value of your home. And as the economy recovers, so I got a short-term plan and I got a long-term plan. So my short-term plan is that I invest in this property, I wait for the economy to recover, and then after that I repost the property for sale at a reasonable price, but much higher. So that makes for money in your pocket. So long-term plan. Long-term plan is you want to make sure that the property cash flows. Now, what is cash flow? Cash flow is after all expenses, you still have money going into your pocket. You don't want to be sitting there and you didn't do your calculations right. It's not hard to go on YouTube and find out how to evaluate a property, but you want to make sure that after all expenses, you're putting money aside and you're able to bank that money. Not necessarily your cash flow doesn't mean profits. Cash flow just means that you can go and put that money to work or have it saved up for a rainy day in case something bad happens. But in my personal opinion, in this video today is why I am going to be talking about stocks and real estate. Because with the cash flow, I'm going to be going and leveraging my money into stocks. Now, leverage means that you're putting your money to work. Every dollar, you're putting it to work as much as possible. Because if you keep it in your account, with the inflation of the economy, you're actually losing the value of your dollar. So if you have your money just sitting there, your dollar actually depreciates with time, because everything goes up. I'm sure you guys, bread and eggs or milk has gone up in the last 10 years. You guys have all noticed it. This is inflation, and if you believe in the economy, inflation will continue to happen. So it's best to put that money at work. And with inflation, if you invest in real estate and invest in stocks, which is actually businesses, then your money continues to grow along with the rest of the economy, instead of having it sit in your bank account and just have dust collect on it. So I'm going to be short term is I'm going to wait for the market to recover, the economy to recover. I'm going to repost what I'm going to be trying to purchase, hopefully. And then that will be equity in my pocket, which is actually money in my pocket. Long term, well, I'm going to be making sure that the property cash flows. And the good thing about, like, the one thing to really consider when you're looking for a property cash flow is you want to make sure that, yes, it might cash flow, but you also want to make sure that you don't have any surprises coming your way. You don't have any major repairs that need to be done in the near future, and you don't want to be caught with any surprises. So you want to make sure you get a good respected inspector to evaluate your property. That way there, you're not caught off guard when you get some bad news in the maybe near future. So we want to help you avoid that. We want you to be able to invest your money and hopefully have cash flow, and then after that, in the hopefully the future, reinvest it into another property and not be stuck in your current situation, always dumping money into the same property. So in the meantime, right now, interest rates are low, which is another reason why you want to be investing in the economy right now. That's why you want to be looking on the marketplace through your local area and looking for any potential buys or any good deals, because right now interest rates are low and the economy is low, so no one else is shopping around, and on top of that, everything is on sale. So you want to be taking advantage of that right now, because it's not going to last forever. It will occur again in the future, and then when it does, maybe jump on that boat again. So in the meantime, right now, for some of you guys this may apply, some of you guys it may not. For first-time home buyers, right now you can go and get a home for 5% down instead of 10% down. But why are you saying home? Well, I don't know if maybe you guys are comfortable, but sometimes you got to go against your comfort zones, and you got to be willing to take some steps in your life. Being not comfortable means that you're on a good path, because you're exceeding the limits of where you think your potential future might be. And when you're uncomfortable, you're exceeding those limits, and that means good thing. It might not feel like it's a good thing, but I'm telling you, if you're exceeding those limits, you feel uncomfortable, you're definitely on the right track when it comes to this. So you want to get that feeling of being uncomfortable, and it's always a good thing. You want to really kind of be optimistic and put yourself in a position where you feel uncomfortable, because when you do feel uncomfortable, chances are you're going towards something that is good for you. So, why am I saying this? The reason I'm saying this is because if you're going to be renting out the properties, you normally need 20% down. But say if you're purchasing a fourplex or a duplex, or a triplex, which is 2 units, 3 units, and 4 units, and if you were to currently occupy one once you purchase these units, you are able to get away with 10% down. But because right now the government is helping out for first-time home buyers, you're able to get your first property for 5% down. Now, why is this bad? This is good, but this is also bad. 5% down, okay, you avoid paying that other 5%, but the government is paying the other 5% for your property. Now, as your property, the equity, goes up, your 5% that you owe the government is also going to go up. Now, that is for your own decision to make. So the reason why you want to take advantage of this 5% down is because with the other 5%, yes, it'll grow with time and you'll owe more to the government. But if you're able to invest it into stocks, which is also down more than half, most of the stocks are almost half the value right now, and they pay good dividends. And if you do your research, invest in good stocks, you're able to really come out on top with stocks. You want to leverage your money. You want to put that money to work, as we covered a couple minutes ago. So if you pay 5% down, you have that other 5% to go and invest in stocks, and you're able to leverage your money. So even if your equity, which I highly doubt, were to not necessarily go up 50% in value, well then we'll say that you have $100,000 property, And then after the market recovers, you have yourself $150,000. And 5% of that is actually $7,500. Originally, 5% equals 5,000. And then 5% of 150 equals 7,500. So $2,500 is difference. Now that's what you'll owe the government more if you don't pay that extra 5% now. But if you go and you take that $5,000 that you saved, instead of paying 10%, because 10% of $100,000 equals $10,000. So you go and you take that $5,000, you invest it in stocks. Most likely in the next year or two, you're going to be able to double your money with stocks. So you take $5,000 and then you invest it in stocks. Make sure you do your research, invest for the long term, invest in dividends, and then you take that $5,000 and you turn it into $10,000, because most of the stocks right now are only half price. So right now is the time to buy, and you turn that into $10,000. You minus your $2,500, and you're left with $7,500 in your pocket. Instead of paying the government the $5,000 right now and paying 10% down for your first property, you go and you pay 5% down. You go, you leverage that money in the stock market, and then after that, only do this if you guys can afford this. If you guys can afford to have some extra money put aside and able to make sure that you can always afford to pay the government back. But if you can't, then it's all up to you guys what kind of risk you guys can afford to take and stuff like that. In my case, if I were in these shoes, I would certainly take the $5,000, reinvest it into the market, stock market, try to double my money, and then after that have money in my pocket, because chances are the real estate market is not going to go up 50%, and you're not going to have whatever you purchased right now will not be 50% higher in value in a couple of years from now. But I can guarantee you that the stock market will. So I can't, no, sorry, rephrase that. I can't guarantee that. I just have I'm very optimistic, and I certainly think that the stock market should be able to recover in the next 2 or 3 years. So that's why, if this was me, I'd be investing it in the stock market, which is why I was talking about both real estate and stocks today. So I hope you guys found this helpful. I know I was a little bit all over the place. If you guys have any tips you guys can help me with, leave it down in the comments below. I'm still learning how to talk to you guys when it comes to this, and I know I'm not no expert, but I'm certainly watching the experts. So until next time, everyone, this is Next Level Success, and always try to reach that next level of success in your lives. See you guys next video.